following is an update and technical analysis on the MGM Grand, one of the largest components to the resort and casino sectors displayed throughout the daily interval. And this is a previous setup in which I engaged on September 11th, 2023. We had a beautiful, well-defined head and shoulder classic looking top with a divergent high. Watch for an undercut of this primary major big time ascending uptrend price support level in confluence of the 4193 handle. And here's the update. This was your divergent high. You had that nice clean breakdown. You had that initial solidified, well displayed sell signal, and that was good for a 20% crash, as a lot of the cyber attack really ushered in some of the biggest distortions and some significant events there off the MGM Grand. Huge consolidation phase throughout that span of time, and who we are. Which I believe to be a technical shift and/or different key inflection point, we have a beautiful, well-defined inverse head and shoulder classic looking bottom, and this is within the beginning stages of a validated breakout off a beautiful, well-defined divergent low, big time bullish divergences on all three technical momentum indicators. On a split of the neckline, we have taken that level out with conviction, and here we are honing in on some key additional targets. You have a potential stop loss. I really don't want to see it begin to melt away, cracking below that 3160-ish handle to usher in that first target there at the 3650 mark for 4.9% in gains, up to the 38 handle at 9.2% in gains. If things get really bullish, back to the top of the descending primary resistance level, call it around the 4142 handle for 20% in gains to the upside. Make no mistake, MGM has broken above a big-time key significant price resistance level, and that has had multiple major reaction really across that entire span of time. Call it a multi-decade price resistance level, cuts through a series of gaps, and the green candle breakout here, call it a gap up, comes with no wick on top, hardly a pinch. We're indicating buyers closed it strongly here at the highs. And the price is now targeting that gap region in between here. And in between the 67.27 handle within the relative strength index, I believe you have strong bullish momentum here, nearing the overbought zone, but still no divergence yet, and could potentially have room to run toward the 70.75 region. You have the moving average convergence histogram slightly beginning to expand here, beginning its expansion, only showing momentum is building, although it's extremely early there. You have a positive direction in the oscillator starting to curl upward, beginning to curl upward, which could cross bullishly and support some of the breakout continuation there. But make no mistake about it, near term, divergent low, positive divergence, strong alignment across all major key technical momentum indicators, only suggesting that institutional interest and sustained push could very well be in the cards there. And I believe this to be an excellent risk versus reward. Once again, as long as the price holds above the 3160, 32 handle. And while some of the casino stocks, including the MGM, surged today following the news of the 90-day tariff reduction agreement between the U.S. and China, the MGM's Macau sector contributed 45% of its Q1 adjusted EBITDA, which makes it highly sensitive to developments there in the Chinese market. And that was a very powerful gap up move. You had the key technical firing power in correlation of the fundamental macro headlines, and that was a big sustained breakout to the upside. But all in all, you have several bullish indicators here in the near term with potential favorable macroeconomic developments and some of the strategic investments inside the luxury and entertainment offerings, an uptick in some of the operational efficiencies, and these factors could collectively position MGM for potential upside. Although once again, traders should remain cognizant of the broader economic conditions and some of the consumer spending trends that will key in on some of these additional second and third targets. Taking you to QBTS, D-Wave Quantum, company of the technology sector in computer systems. Just a quick additional pure technicals. Running this trade off of pure technicals, you have negative and bearish divergences constructed here amongst multiple key technical indicators. You had that first big divergent high, huge negative RSI divergence, and it has only continued to construct and establish on all key momentum indicators, only increasing the odds for a much larger drop to come. Make no mistake, this is big time resistance, a triple top potential transitioning pivot point for any short sellers and or bear traders. They want to take on a revisit of the 50-day moving average for a 26% crash and a potential second target down to the 605 handle for a 41% crash, setting some stops up above the 1144 handle. Bull traders, long traders, they want to see a solidified, sustained breakout, green infused candle overcut up above the 1144 handle to go on to re-challenge some of these negative and bearish divergences that have been constructing on multiple indicators. Call it an aggressive escape velocity trade to the upside if and when that scenario were to play out. But make no mistake about it. Make no mistake about it, with huge volume spurts to the upside, the risk reward favors. The ball is in the bears'